Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, it's time for our weekly stock market update. We're going to be looking at the usual suspects as always, which is our proxy for the S&P 500, which is the SPY ETF. We're going to be looking at the Nasdaq, NDQ, have a quick look at the VIX and a quick look at the PCC put to call ratio as well. But before we begin, a quick word about the many benefits of becoming a member of the Green Star Trading Patreon. If you already appreciate the work I'm doing on YouTube and wish to show your support for the channel, then why not join Tier 1 for just £5 a month? You still bag yourself an exclusive video each week that won't be available on YouTube. Or why not consider joining Tier 2 for just £10 a month? You still get the same exclusive video each week, but you also get access to the public Discord. There are multiple channels where you can discuss things to your heart's content on multiple subjects with all other Discord members, including myself. You also get access to the entire back catalogue of my educational videos, including the Elliott Wave series, plus other technical analysis videos, including trading and trading risk management. I also host a live session each week via private link to the YouTube. Then finally, Tier 3 for £15 a month. You get all of the previously mentioned benefits from Tier 1 and Tier 2, but you also get access to my monthly dividend calendar where I list my stock picks for the month and all of the relevant ex-dividend and payment dates. You also get access to my stock rating system, which is an at-a-glance rating out of 30 based on company health, value and overall dividend quality. If you yourself wish to look up a specific ex-dividend date or payment date, tag me on the Discord and I can look it up and get back to you. Also, if there's a stock you're interested in and you want me to use my rating system on the stock that you had chosen, tag me in the Discord and I will get back to you with a score. Thanks for listening guys, and now back to the video. Okay, welcome back guys. Right, we're going to start here with the NDQ, which is of course is the Nasdaq 100, and we're going to look at the current Elliott wave count, see how things appear and consider some alternatives as well. As I've been saying for many months now, for as long as the trend holds we can continue to be bullish. For as long as we see a return to trend resulting in a bounce, we can continue to be bullish. But if that trend breaks, then we can put on our bearish hats and pivot. This has always been an inevitable reaction at some point. We don't know when it was going to come. We don't know if it's now. We could see the market rally from here, but if we don't, we have to now be on guard. So here's the Nasdaq as I see it currently. We've been in this constant upward trend, and every time we've pulled back we've had a bounce. Okay, and we are back here again, except this time in a slightly more bearish setup. We have broken the trend more decisively this time than we have on previous occasions. Now if we were to replace this parallel channel with a regression channel instead, we can see how if we just extend this further and fairly take in all price data since the March 2020 low, bring it through to, you can see how this suggests a more significant break of trend has occurred and we are currently trading below it. So now that we have broken or moved more than 2 standard deviations away from the mean, given all of the historical price data recorded for this regression channel, we can consider the possibility of being bearish here, and if we see further weakness and further breakdown, then we will be looking for an impulsive move to complete and a retracement back up, and that's a shorting opportunity for future bearish price action. So I have been reducing exposure throughout the week, although my value investing portfolio I don't consider to be an issue given the lack of exposure to tech and mega cap stocks, so I haven't really done anything there. But regarding trades related directly to these indices, I have either taken them off or reduced exposure significantly as I wait to see what happens. So we have to be prepared to potentially pivot bearish once we get the opportunity to enter short. However, as I have said previously, we can always bounce and continue higher. So in the short term, the way I see things is we have this is either a free wave pattern. Okay, now I can't get a 90% retracement in the B to call it a flat. So what I'd have to rely on here is just a deep zigzag, and in that case I'd have to have this as a diagonal coming down in an A, then a 3-wave flat into a B, and then an impulse coming down in 5 waves in a C. Now if this is the case, this should complete soon and continue to bounce higher, having completed an intermediate wave 4, and then this will move back up in 5 waves again to get a wave 5. Now if that doesn't happen and we continue to break down more sharply from here, then we'll be looking for a 5-wave impulse from these highs to complete. It could be a diagonal down into a 1 of an A, it could be 5 down into a 1 of an A, or it could be 5 down into an A, okay, depending on the level of wave degree that we're correcting. But that's what we want to see before we consider getting in short here. We want to see some kind of convincing bearish move and then a retracement opportunity, perhaps retesting the previous trend, and then a further sell-off will begin, and that will be the opportunity to short, whether we're trading down in a C or whether we're trading down in a 3 of a 4, 5 and A to come before a B, and then a further 5 waves down in a C. I think the likelihood of that happening is less, but if that was the count and it was to break down that way, that would likely mean that we topped here and that this isn't a 3 or 4 or even a primary 3, but more likely a primary 5. Now I've had a count a long time ago which was a much more bearish count, which covered the possibility of the market having already topped. Now that was back here, okay. Now we've got another high which is lower, but I don't see, unless this is a diagonal, this could be a 1, A, B, C into a 2, and now this could be the beginning of a 3 that's unfolding into a 4, into a 5, into an A. That would, if this is the case, then that would much more likely, we should in theory see significantly lower pricing over the next few sessions before bottoming out and then getting a retracement likely to test the previous trend before heading lower. So that will be the shorting opportunity if that count is correct. So I'm going to leave the 5 over here as a possibility of the market having topped, although we are, until proven, until we see this breakdown further, I think it's still just a little too early to shout bear, but we have to be prepared for it. That's what I've been saying for months now. We stick with the bullish trend for as long as the bullish trend holds, but if the bullish trend breaks, we have to be prepared to flip. That's just reality. So let's move this into line with the SPY for the moment. So if we've completed the 3 and the 4 here, we shall bounce immediately pretty much and continue higher. If we completed the 5 back here, we've done a diagonal 1, 3 waves into a deep 2, and are now impulsing lower in a 3, then we will continue to see price break down and we will wait for the short entry opportunity. Okay, so that's how I see the Nasdaq currently. If we come over and have a look at the SPY, we can see I have the same idea of 3, 4 here. Now I don't have the luxury of assuming a top in place here, as we got a swing high here in the SPY which did not occur in the Nasdaq, so I cannot apply that same count, and I see no evidence of this being an impulse. I see no evidence of this being a diagonal at all, so I can't get a negative or bearish move here. What I can do, if I wish to stretch it, is I can say this is 1 and this is 2 as I have labelled, but instead of this being 3, 4, I can take this upper wave degree, stretch it to here, and then complete higher. Okay, so this would now either become the 3, and this is the beginning of a much more significant correction into the 4, or this is similar to how I counted the Nasdaq many months ago, a potential 5 up here, and this is now a 1, this is now a 2, and we're going to come 3, 4, 5 and come down lower. Now if that's the case, we will break trend and continue to head lower, and we will get more and more bearish signals. But the same situation applies, which is once we get a completed impulse or a completed diagonal off of the high, we can look for a retracement, and then if we so wish, and we don't have to, we are not obligated to short trade the market, we simply will wait to see how things play out if that's what you'd rather do. As I expressed, have already been reducing exposure to these markets. Not in the case of my value portfolio, as the stocks I tend to invest in long term are so beaten up already. I actually think there will be a shift into value when that day comes. Regarding exposure to tech and large cap stocks, we do this on an individual basis, and we do it using the same Elliott wave and standard trade setups we always use. So in that sense, we wait until the market tells us what we're doing. Now in this case, we wait and see how this develops. If we look at a parallel channel, we can see how we are still some ways off the bottom of this thing, unlike in the Nasdaq where we've broken it. Now we have tested it back here, so it's possible that if this is the 1 and the 2, and this is a 3-4, we've got lower to go before going higher. But if we have to keep in mind the more likely trend. So if we take the regression channel that we've used in the Nasdaq, we can see that we've broken it. Okay, I just need to find exactly where this thing ends and update the current price data. So we have drifted out of it. Now we've drifted out of it on occasion before. Here, here, here. But this is a little bit more significant. So this is starting to be worthy of note and to be paying attention to this. If we look at our pitchfork that we've used many times to frame this market, we can see also that yes, we've broken it back here and we've come below the bound here. We've come to it here. We've come to it here. This time we're breaking it again. Now if we bounce from here in an impulse, hunky-dory, that was 3-4, we're looking for the 5th. But if we break all of these structures and continue to head lower, looking for that completed impulse in what can really be assumed as a 1 or an A, then the retracement back will be the opportunity in either a B or a 2 to trade what will be either the C or longer 3. Okay, so that's really what we're waiting for now. We're in a waiting pattern to see how things develop. But as I've been saying for months now, we stick with the trend while the trend is there. If the trend breaks, we reconsider, and then we wait for evidence to confirm a bearish bias. On that note, let's come over and have a look at the VIX. VIX is slightly elevated today, around the 22.59 level, but nowhere near the previous high, dominant high of 35.40, still below this downward trend line. The 60 is below the 50 on the exponential moving average, the orange below the green. It could pass back above it. We've seen it above it here before, and also for this period here of consolidation, but no sign of an explosion yet. If we take out this high and any of these previous highs in a violent move which takes us back above these levels, and we see confirmed with price action in the major indices, that would be obviously a sign that we are probably going to have a pretty impressive run up in the VIX. Okay, and that could be something much more significant occurring. So nothing to scream about yet, but as I've been pointing out for months, we have had this rising lower trend line of volatility gradually just increasing over time, and there being a higher base of support for the VIX. This has been a continuing theme, so we'll be keeping an eye on this, see if we do get elevated VIX readings, see if we take this previous high out and break this downward trend. Now if we look at the PCC, we can see, as I've mentioned multiple times on previous videos, the march back up from extreme greed and complacency to extreme fear can take years, months or years. It can be done relatively quickly, it can be done super fast, but very, very rarely is that the case. It's normally a matter of months or perhaps even a matter of years to move between these two levels. This is quite a fast collapse here. Now we've been slowly stepping our way up since August of 2020. Okay, we had come up, come back to a low, then we started to work our way up. So if we take this as a double bottom, we'll say February 21. Okay, and since then we've been marching our way up. So if we come into the smaller time frame for a minute and have a look at these moving averages, we can see that we're currently witnessing since the 14th through to today, we are currently witnessing another little move up. We have, and I'm not saying you can perform Elliott wave on the PCC moving averages, but we can see what is considered a bit of a move up and a potential correction, which doesn't set a new low, and now we're moving up again. So if we take out these highs in the PCC, it's possible that we're going to continue to step up and find our way up to extreme fear. Okay, but it's taking a fair old while. I mean, this is from November 2021 back here, so a few months ago, and these lows were set all the way back in December 2020. Right, so we have to be on guard. We've moved back above the inside bound here from the extreme, and we're now back into neutral territory. VIX is slightly elevated but not exploding. SPY is challenging long-term trend and could break it, and the same with the Nasdaq, has broken the regression channel here and is right at the edge of our parallel channel. So all of these are signs that we have to be on guard. They're not signs necessarily that the market won't bounce higher from here, but every time we return to trend, we just have to be prepared to see it break. And if it breaks significantly, we can wait for that initial move down to finish, wait for the retracement back up, and then we can consider a safer setup for a short once we've got directionality. Okay, so now let's bring up our moving average. Bring up our momentum indicators here on the day time frame. And what I find interesting here is no divergence between this high, and this high. We finish with, in terms of from here to here, we finish with the smallest divergence of 3 to 5, which is what is quite common, but it's only on the minute wave degree here between this high and this high. We get divergent highs here in the RSI, also in the MACD, and that heralds the beginning of this correction. Now we're almost at oversold conditions already. So yes, we're breaking trend more significantly, but if we just take a look back at oversold, we can see that these were lows. Okay, we did not go any further, and this has been the resultant upward trend which has been in play for months and months and months. So heading towards oversold, not quite there yet, perhaps a little bit more of a push down and then a bounce. If that doesn't occur and we get a more bearish move down here, then we can consider the possibility of either a larger wave degree playing out or even the market having topped. But we're not going to jump conclusions just yet. Okay, we're going to wait and see if it becomes more bearish. Now let's come over and have a look at the SPY, bring up our momentum indicators. Now this one's a slightly different kettle of fish, because we get a much more significant divergence over a longer time frame here on the daily. We get this. Okay, from this high to this high is an extremely strong divergence, appearing also in the MACD. So with a free wave move, we're either finishing, as I suggested earlier, a 1-2, a larger 3-4 into a 5, and this is a significant high, and this is divergence between a 3, what was the 3 here, and this becomes the 4 here, and this becomes an impulse into a 5, rather than 3, 4, 5 to here, and then a corrective move. It's also possible that this is a swing high of a correction because of the lack of strength behind it. So whether you get an A, B, C of a flat, an expanding flat, I've had to label this WXY, and I'm not a big fan of expanding Y patterns. I prefer to be able to put a B in place rather than an X. Now the thing is, I can't get a diagonal or an impulse down here, so I don't have the luxury that I do of a lower high in the Nasdaq where I can simply say zigzag. We come to a higher high, so I have to be able to get 3 in here, and I can't get A, B, C zigzag in here. Right, I'd have to say WXY within a W, which is something I really don't like doing. Now here I'm fine, I can get a flat, okay, for the X. This could be 1, 2, 3, 4, 5, and then we can have A, B, and 5 waves in a C, perhaps a diagonal. Okay, and that gives us our 3 and our 4. Our 4 just has to come down lower, and then we continue higher. So it's still pretty much early days at the moment, and it's going to depend on price action. The market's literally just opened as I'm speaking to you now. It's opened slightly higher today, above yesterday's lows, above yesterday's close. If we get follow through from here during the session, we can consider this possibly a three-wave correction complete, and we're going to start impulsing higher. If we roll over before the end of the week, take out yesterday's low into week low of the 28th of December, into month low I should say here, then the low here back at the start of December. If these lows break and further price action takes us down, then this is really the next basis for support here. This previous low becomes pivotal in October. So if we see that impulse down here, we break those lows, a retracement opportunity up for a short would be the way to play it, I think. But we'll have to wait and see how it goes. Alright then, so not quite in oversold conditions yet, but as we've seen before, every time we get down to these levels, okay, every time we get down to these levels, we rally. Just like we did off of the March low. This is the October low, and this is the September low last year. And as you can see, every time we come down to these levels, we rally. So trend is under threat. It may be breaking. If we get further bearish price action to the downside, we can come back, reconsider our count, and prepare ourselves to be bearish and flip bearish to adapt. If we bounce from here, then it was just a slightly deeper reading, which we've seen a few times before, and we continue to support the bullish count. So that's it, guys. Wait and see what happens over the rest of this week. It's Wednesday now, so let's see how Friday closes. If we get a negative close for the week, let's just have a look at what the weekly candles looking like so far. Okay, got this doji here the previous week. Slight wick down to the downside at the moment. It's still too early to tell what this is going to be. If we get a weekly close below all of these here, that's quite bearish, and I think that would confirm having broken the upward trend for the week. We'd have to then see further bearish follow through in order to see that future retracement. VIX is coming down a little bit since the open over a few minutes ago, but not collapsing in any way. And how's the Nasdaq looking? Opening also above yesterday's close, but that could continue to fall. So that's it, guys. I'm going to leave it there. Now, if you're on the, if you're a member of the Green Star Trading Patreon, I will be doing my live stream on YouTube tomorrow, Thursday, from 1 PM. And we will be looking at, since the markets are potentially testing their trends, we'll be looking at the big tech sector. So we'll be looking at Amazon, Google, Facebook. We're going to look at Netflix as well. We'll look at Twitter. We'll look at tech in general. We'll spend a few hours going over that and see if we can find some clues as to what's going on, and just throw up some Elliott wave counts as well. Now, if that sounds like something you're interested in, and you're not yet a member of the Green Star Trading Patreon, there will be a link in the description box below. You can head over, have a read of the tiers, and if you're interested, you can sign up and enjoy that live stream tomorrow. If you're new to the channel and you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below. And yeah, if you're not following me on Twitter yet either, there's also a link in the description box below. I always post on Twitter when I upload a new video to YouTube. Alright guys, take care of yourselves, and I'll be back with you later in the week. All the best. Bye bye.